welcome back to the ROSEUSDT Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich.
Hello, everyone. Welcome back to the RationalInvestor.com's weekend show, the Broiler Chicken Show. It's too bad. I was super excited. Everything was humming along, and then I went and lost my cell phone this morning. And I'm pretty stressed about it. I don't know what to do. So, unfortunately, we started the video late. I didn't really have enough time to prepare newsletters and stuff because I've just been so messed up over this. So my apologies, everyone. I'll try and do as good an offering as I can for you guys, but I'm a little bit out of it today. It's too bad. It looks like Bitcoin's actually doing fairly well. Not quite sure what's going on with the breadth indicator. Stock markets are moving higher. I did see the team was kind of scratching their head a little bit. The crypto universe, yes, it's pointing uppy, but geez, look at that breadth indicator over here. It's just embedded. And unfortunately, I know Seward did go and change the entire construction of this index, so I don't know whether it's actually performing up to par right now. So I'm a little bit disappointed in that as well. So a little bit of a challenging time for the old Brian. We are on the road. We are in Sacramento right now. In fact, actually, spent a lot of time with Adam, going through his list of cryptos that he likes a lot right now on the monthly basis. So I thought maybe we'd take some time and peruse some of those names. As well, we can do a bit of an overview for Bitcoin, being the Super Bowl weekend and all that. So, in fact, actually, I think once we're done these, I'll try and do a video call with Liam, and then we're gonna head off and go to Super Bowl parties here locally. If I can find my damn cell phone. I'd spend the entire day just tearing Adam's house apart looking for my cell phone. I'm not quite sure where the hell it is, and I can't afford to lose that damn thing. But anyway, my apologies. It's going to be a bit of a screwy show here today, folks. I'm kind of caught with my pants down today. Anyway, really should be on vacation. Maybe one of these days I'll just officially take time off. But what the hell? Wanted to really try and be consistent with the offerings for you guys. And also, too, we have met some new people on our journeys. The Solaris clan. We have to, not the Solanus clan, the Solaris clan. Did I get that right, Adam?
Solari?
Solari, they're next door neighbors. Anyway, welcome to the family, Solaris, and let's try and make a positive difference in your life. Of course, also great to see Eddie in the Zoom call there, giving me positive reinforcements. As always, he's such a beautiful human. Thank you for being in our lives, Eddie, and trying to shine a little sunshine on us. Always a good idea, of course, start with the US dollar. Not only are we transitioning into a greed cycle, which actually means you should expect the US dollar to go up, but also too, US Feds has a premium on interest rates above the rest of the world, which is probably what should happen if the hegemony system is operating correctly. And so as a result, it's just a question of how much of a discount do all the fiat currencies that trade against this thing, how much of a discount do they have to the American rates? If I understand correctly, the inflation problem over in Europe is still pretty bad. It's interesting how they're pausing now. And I got to say, I'm a bit surprised. I did come down to California here. I haven't been down to California in a while. And Actually, Chris and I were even noticing, and literally the moment that we crossed the border. Remember that funny guy? What was there? What was the funny guy at the border? There's actually a border guard between the state of Oregon and the state of California now. Can you believe that? There's actually a border guard. Yeah, and he's like the goofiest guy. But he said like, hey, you're supposed to declare all your vegetables and I don't know, throw out all your politically incorrect passengers, which means I probably shouldn't have made it over the border. Not quite sure how they let me in. The guy at the border, he was like the teenage pimply faced guy from The Simpsons whenever they make reference to an awkward teenager. He seemed like that, and he's like, "Oh, welcome to California." It's really bizarre. But anyway, I was pretty surprised. There was actually a border crossing, and you actually had to like jump through a hoop to get into the state of California from Oregon. I was surprised at that. But more importantly, when the moment you cross the border into California, literally everything, every single price tag, all added 25-30%, which was shocking to me. So on the Oregon side of the border, gasoline was like, I don't know, 380, 390 a gallon, something like that. Instantly over into the California side of the border, that jumped up to like 450, 475, just like instantly. And everything. Went to the grocery store, just bought like Chris and I had a meal in Crescent City. We stayed in an Airbnb and we made a nice little meal. And just going to the grocery store to buy groceries for the meal, it was like 75 US dollars. So it's like incredible. So maybe to a certain degree, that was like a little, vacation resort town. So prices were a bit higher there anyway. But quite shocking. And then actually, we went out and we had three smoothies yesterday. And the bill came to a better part of 30 US dollars for three beverages. Didn't even have any alcohol in them. Remarkable. So this goes to show, sign of the times. Um, it's a bad sign when prices in California are higher than they are in Canada. And you hear me bitching and complaining about the inflation in Canada. That's nothing compared to what's going on here. This is insanity. But anyway, it is what it is. The good people of California got to put up with it. So, good lesson for all of you, though. You know, if anything, what you have to do is you have to just keep trying to stay ahead of the game here. So, point of having this chart on the screen is to illustrate that the US dollar has been actually moving higher here for a better part of the year so far. Maybe a little too far, too fast. I don't know. This is about a 5%, 4.5% jump in the US dollar over the calendar year so far. It does look like there's a bearish megaphone pattern that's working here, which does imply that we're probably going to have to come back down and tag the bottom of this megaphone. And interestingly enough, we have the runner on. Oh, the little demo bot trade that we did earlier took profits on one contract. At the bot objective, stop to break even on the remainder on the runner. And ironically enough, based on this megaphone, if we do have actually a pretty big drop in the US dollar index, that actually should be risk on band, which means probably going to see money piling into stocks and gold. I had a dream the other day that gold, I looked at the gold chart and it was like straight up. So that might be a harbinger. Usually my subconscious gives me dreams and about that kind of stuff ahead of time because my subconscious is trying to just put all the pieces together. So be mindful of that. And of course, through the 1980s, gold did okay, but gold stocks themselves did very, very well through the 1980s. And I could see a repeat of that. Anyway, so we'll see what happens here. It does look like there's a bit of a short pattern here working on the US dollar. And I did notice that when we looked at like the stocks and stuff like that, they're all trending comfortably higher. Interesting, even the Russell 2000, the small cap market is starting to firm up here. But if we look at like on a weekly chart, I mean, you look at that Dow Jones Industrial Average, that's got bullish bot written all over it. It's got, one higher low or yeah, higher low, one, two higher lows, three higher lows, probably the bot entry somewhere in there. So let's see, just for argument's sake, boobity boo. And boobity shmoo. So we did 33, but did not go beyond 66. And boobity coo. And boobity roo. Let's see what we got here. Boom. Yeah, there you go. So bot entry sort of in this area. And it's projecting the way up here, 46,000 on the Dow. Probably they're going to take a run at 50,000, kind of like what we're seeing out of Bitcoin right now. Big fat round number. Probably acts as a magnet. I remember at the turn of the century, Larry Kudlow came out with a grand prediction that by 2030, the Dow would be at 30,000. And everybody's like, 30,000? You're crazy, man. Are you on drugs? Yeah, well, we passed 30,000 a while ago, eh? And looks to me like the market wants 50,000. And it just goes to show this is what inflation does to you. It's absolute criminal. The value of assets just literally melts right in front of your eyes. But anyway, here nor there, I suppose if you're ever sort of in the mood and you want to sort of see what the real image looks like, what do these real numbers look like? Because they've gone and screwed with the underlying asset so much, probably best to use something like the Diamonds ETF, right? And just divide it by M2, right? So they printed so much money. In reality, actually, that's what the stock market looks like. A very different image than what this image tells you. This image says, yeah, we've blasted through even the January 21, well, I guess December 21, January 22, like the end of 2021. But you come over here and you can see 2021, that was that peak on a diluted basis, them printing and printing and printing more money. If everything was equal, you'd see that we haven't actually broken through there yet. And I think you could make the argument that the economy itself probably won't go into its sort of next major, official growth phase where you're actually all feeling wealthier and you're all got full-time jobs and your incomes can easily afford you having disposable income to go spend money on other stuff and the economy is really expanding. I don't think that that's the case until we're actually up through this level here. So ironically enough, even where we are now, if you look at it in just raw dollar terms, that's probably with the Dow up in like mid 440, 42, 43, 44,000 kind of area. So go figure, right? Tough world we're living in right now. But interestingly enough, this was basically 9/11 over here, right? Right, 9/11 was right there. And you could make the argument that this is sort of our Great Depression, the contraction of our society. Of course, the solution is, heaven forbid, we can't let prices fall. So we've got to dilute the purchasing power of the currency, which of course leads to inflation, which destroys people's savings. But who cares? Savers are suckers. You better go and buy hard assets. And of course, anybody, Adam, how have you done on your house? I think he did pretty well. He bought a house. When did you say you bought your house, Adam?
2013.
13. So that's right in here. He bought his house right in there. Nice move, Adam. So you can see buying hard assets. And this is in real dollar terms. In inflated dollar terms, of course, Jesus, can we even see where it is on here? He bought his house right here. So how's Adam feel? Like, I think Adam's doing pretty good. So anyway, it is what it is. And as I said, it does look to me like the market's moving higher. And also too, we joke about this a lot on the site. I met a couple new people to the site in the school program, sort of throwing all the cliches at them. Really, if you go out into social media and you go out into the public and you ask them, what do they think about the economy and the stock market and stuff? Actually, most people think that the market's going to crash and it's going to go down. And usually markets don't do the exact opposite of what sort of Joe Sixpack thinks is going to happen. So, I guess the point here is that we have to get the public all bullish, all rah rah. You'd be an idiot not to be invested in stocks, right? We have to get that kind of conversation going. As soon as we're there, then you should probably start thinking about, maybe hopping off of risk assets. But for the time being, up, and away. Of course. And really, the only thing that matters probably to this community, mind you, we got a few stock players in this community. But how's this going to reflect on good old Bitcoin? Bitcoin. Um, we've been talking for, I don't know, about the past year or so about where we are in these correction cycles. And, as I'd said, met a couple new people to the site recently, and I don't think they really understand this. Maybe they will over time. Fingers crossed. We are actually heading into a friendly part of the cycle. I tried to convince this to two people that really aren't very market savvy last night, but I don't think I did a very good job. And I mean, the irony of it all is that anybody that I talk to in the public right now, they did buy crypto like 2 or 3 years ago and got burned. They bought the top of the market. I mean, I had two different conversations recently with people along those lines, which is pretty typical. And people are still sort of carrying that emotional baggage from, buying Shiba at the top of the market there kind of idea and having to ride it all the way down. So I don't even think we really even have the public participating too much in the Bitcoin story, but kind of like with the stock market, what a big surprise, Bitcoin making higher highs and higher lows. And considering the way the gold and the gold stocks acted through the 1980s, and Ronald Reagan came into power and justified runaway deficit spending. Yeah, we don't need to balance the books. That's for the grandkids to worry about. I suppose now it's the great grandkids. But hopefully you can see, and this should be a lesson for all of you that are alive now. This is the end result. Like you go into the grocery store and a loaf of bread now it's like $5, $10. A dozen eggs, good $5. This is the end result of the previous generations basically mortgaging their kids' futures to continue their lavish lifestyles. And of course, you got to keep building more B-2 bombers. And Donald Rumsfeld, we mysteriously lost $1.2 trillion. We can't seem to figure out where to find it. But don't worry, we put all the records in the World Trade Center building. And of course, that building will never get into trouble. It's safe as Fort Knox. Jesus. Anyway. So, but this is the world that we live in. And, in the world that I sort of, my previous existence as a broker and all that kind of fun stuff, I would have, frankly speaking, the economy was like, 1 trillion to 3 trillion, which was just a staggering number, and everybody couldn't believe it. Who would have never believed that they would have been hyperinflated this to 30 trillion or 25 trillion or whatever the hell the damn number is now. So in a world where the economy was 1 to 3 trillion, I couldn't imagine Bitcoin being hundreds of thousands, if not millions of dollars. But in an economy that's 20 to 30 trillion, I guess 10 to 30 trillion, and relatively speaking, just add a zero onto the end of all your balances. I don't think there's no reason why Bitcoin couldn't be $200,000-$300,000 a coin. That would, ironically enough, be kind of the similar state as when Orange Toupee was actually last in power. Yeah, he ran up Bitcoin prices and all his cronies up to 20 G's, right? So could they run it up this cycle to 200 with the money supply just being 10x what it was when he was last in power? Sure. And it's not even really that much of a stretch. I mean, that's actually just economics 101. It's not really even excessive. Maybe excessive is the darn thing goes to like a $500,000 a coin. Who knows? And actually, interestingly enough, interesting comparison. If we look at the last cycle, right, they ultimately bottomed the coin here around 3 or 4,000. and they topped it at 60,000, right? So that's basically like a 20x move. So our bottom here this go round was about 15,000, they give or take, somewhere in that neighborhood. So 20x that would be what, 300,000. Wouldn't be out. I mean, yeah, you never know in this crazy world. But it wouldn't shock me if we saw that. Having said that, you can kind of see this whole price action for a full year has been straight up. Starting to get the public interested in all of this. And of course, we've got our big happening event coming up. And, in previous happening events, like this one here, this one I think happened on my birthday, we had to kind of go sideways and clean up a bit of the excess. In fact, actually, this pre-happening run up, they took it all the way up to Mountain Man and then to bring it all the way back down. I don't know if they have to bring it all the way back down here this go round. I'm kind of feeling like this market bottom is going to be more like this previous cycle where we had the halvening event. Well, they had the run up prior to the halvening event. And actually, if you look at Litecoin, it looks very similar. Big run up pre-halvening event, about a month or so ahead of the halvening event, the market tops out, and then this ultimately from peak to trough. And you notice that it's just like one candle that went zipping down. I wouldn't be surprised if it's some sort of event like this go around. It really wouldn't surprise me. But you see that the correction, boom, 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 boom. And how long is this? I think you can make the argument that the correction will be a grand total of roughly a little less than 2 months. So you could make the argument, and maybe somebody write this down. We probably should top somewhere around middle of March, Ides of March. That's usually a pretty good psychological window for that to happen. And within 2 months, right around my birthday, right? So Bitcoin's going to puke out on my birthday, typical. And actually, I found out another person that's a TRIer now has a birthday on May 11th. I've never met anybody in my entire life that had a birthday on my birthday. And now I know two other people that have my birthday on my birthday. That's freaking. But you could see, right? We topped the middle of March. 7 to 8 weeks later, this is a weekly price chart, takes us to the middle of May, and you see that Bitcoin pukes out on my birthday. Everybody hates me. Oh, thanks, Brian. You're such a jerk. You're topping Bitcoin, blah, blah, blah. And it turns out that's actually the bottom, and that starts our next big honking bull run. So get ready, folks. And I still think that this is if there was going to be a comparison purposes, and you can kind of see this is basically what Bitcoin's done over the past year, right? So 1 year prior for this thing would have been sort of like in here, right? 1 year's price action. And we fast forward to today. 1 year's price action. It's pretty similar. So that's kind of what I'm thinking. 50% level sitting down there. I mean, I don't know where we top out. I think I've told you guys here recently that we had a huge wick up top, huge tail down below. So they identified trading range. That's what these dotted lines are. Also, too, we had a pretty significant high to low trend line. Actually, I think this was like a peak to peak trend line. And then you can see over that last cycle how significant it was. The price completely just oscillated around it. And lo and behold, boom, that's where we stopped this latest run. And gee whiz, that's where we are right now. So it was really just a question of we were stuck in a trading range. Wicks like to be eaten, tails like to be eaten. This tail will probably need to be revisited at some point in the not too distant future. So, it's just really a question of which way we're going to resolve out of that. We know that the happening event is here. We know that the market likes to top out about a month ahead of the happening event. So the bias, I think, was to upside. Also, too, there's a couple other things that were kind of floating out here that really should have been tagged, but never were. This is a measured move if you think inverted head and shoulders. which means that this is a neckline, and the distance from the neckline to the head, you should project that off of the neckline, and that gives you your price objective. And that was sitting, according to this, 49,300, 400 area. And the high here just recently was 49,048. So we never did hit this inverted head and shoulders price objective. And then also, too, the big thing is, and this is kind of something that if you're not really familiar with the market, but it's ironically enough, whenever anybody asks anybody on these sort of business channels, is there any relevance to this? They always poo-poo it. But as a technician, I find that it's incredibly significant. And keep in mind, most people that are interviewed on television for like financial stations and stuff like that, very few of them are technicians. Most of them will be like fundamental analysts. Hell, a lot of them they're just glorified salesmen. Um, Maybe quantitative, but very few are actual technical analysts. Because no offense, but technical analysis is actually pretty boring. Those guys are kind of sticks in the mud. When everything's booming higher and everybody's all, the technician's like, oh Jesus, it's got trouble written all over it, right? So they're always the party poopers. So point being that whenever you hear people asked on financial stations, what's the significance of this big century mark, Dow 10,000, Bitcoin 50,000? They'll be like, well, it doesn't really mean anything. But as a technician, these are hugely significant. So it's more of like a psychological game. And really, in a weird sort of way, half of what we do and what you see on the price chart here is nothing more than just a reflection of human emotion and sort of our collective perception of what value is. If we all agree something is worth something, then odds are price usually goes to those levels. And when it comes to something like a big fat round number like $50,000, it'll just sort of be like, well, it's awfully close to that. It's at 49,137. Odds are actually the 50,000 will actually act as a magnet. Where like if somebody wanted to sell, they might just put their coins up for sale at 50,000. I want 50,000. I want to see on my actual filled ticket, I sold Bitcoin at 50,000 or higher. I don't want 49,728. That's chump change. I don't want 50 G's, big fat round number. Anyway, so quite often I see in my experience, markets love to run after these big fat round numbers. And this is a pretty big fat round number, folks. Doesn't get any bigger or fatter. So unless of course you're talking about Brian's waistline. So there it is. And the comment that I made on the tweet today is, what do you think the odds are? There just might be a commercial about crypto this afternoon, airing on airways that hundreds of millions of people around the world are going to be tuning into. Do you think there's any odds that we might see a Coinbase commercial today, maybe? Or I'm the biggest ETF issuer in the world and I run everything. So I've just listed a Bitcoin ETF and now you public have to come in and buy this thing that I just listed. If there's any odds that you might see something like that, I'd say probably pretty good. I would be really surprised, to be honest with you, if I didn't see a crypto related commercial in the festivities this afternoon and this evening. So, and also too, interestingly enough, one of the teams that's playing in this big game here today is sort of from kind of the tech area of the United States. So probably plays pretty well into that space as well. Anyway, I happen to be ground zero for this event here today. gonna be hanging out with some of the locals. And it's interesting when I say that I'm from the Seattle area, and by definition, I'm not allowed to cheer for this local team. I get myself into a bit of trouble, so I should probably keep my mouth shut. But anyway, it should be a fun afternoon. But I wouldn't be surprised if half the reason why you saw Bitcoin price get bid up here, because there's probably going to be some marketing around this event this afternoon that happens to deal with a recently listed ETFs and encouraging the public to come in and buy them. And of course, the public's going to have to pay top dollar. No way they're going to get those damn Bitcoins cheap, and there's no way they're going to get the Bitcoin ETF cheap. And I wouldn't be surprised if there's like a flurry of sort of buy orders first thing Monday morning. And keep in mind, that's tomorrow, right? Today's Sunday. So you're probably going to find that this thing stays relatively firm through the game this afternoon, unless there's some horrific scandal or something that happens, which I doubt. But I wouldn't be surprised if there are some like market on buy orders or buy on market orders on the open tomorrow morning for that ETF or for Coinbase stock or whatever shillers there are that are going to be shilling through this Super Bowl advertising this afternoon. And so for crypto to be basically up at the top end of the range, being well bid, and the paying customers having to pay top dollar for those Bitcoins makes perfect sense to me. There's no reason why that would be discounted here. So not a big surprise to see the market right up at the top here. I suppose looking at the total crypto market, right? So this is like the bigger picture. I think there was like an inverted head and shoulders. We also saw this on Bitcoin price as well. If we just quickly going back there, that was just through this off the daily chart. I don't happen to have this screen up in front of me. But you can see the same inverted head and shoulders pattern off of the total. And really, you could make the argument that, again, this is also a measured move. So boobity boo to boobity boo and clone that boobity boo off of the neckline. It looks to me like we have to go up to new highs here. Which I think on balance makes sense. I mean, this isn't really rocket science. We are in fact, actually, this fib was just done purely off of this high. We could go all the way back to that high and notice 61.8, good old Mountain Man. It would be a test of this previous sort of liquidity pool high, if you will. And I don't know whether I've done this. Is this, what scale do we have here? Well, let's do it regular so you can all see this. And we'll go settings. Yeah. All right, that's better. All right, so I think it's probably a pretty good shot. We work our way up top here. Also, too interesting off of this consolidation range, fog and bombs were that previous high, banged into there 2.618. Looks like next stop 4.669 is going to be up against these highs here, and probably even a little bit of a price gap right in there. Looks like there's one there as well. So, there's an old expression in the market that goes, buy when it snows. So it usually starts snowing in this time of year, right? October, November. And of course, anybody that's worked with me over time, you know how much that Brian guy likes his W's. Sell when it goes, and usually it goes in like that May, June time period. And of course, we've got the halving event coming up here for Bitcoin itself. I guess not right there, but a little bit further, right? Maybe mid-March. Where's March? March, yeah. Somewhere up in there should be sort of your Bitcoin peak, and then this all sort of rolls over here through that halvening window, and then maybe, like I said, around my birthday, May, you get a little bit of a dip in the market on the sort of hangover. And then we got to sort of clean ourselves up, getting ready for the summer silly season. And usually crypto does pretty well through the summer. But I could very easily see something along one of these lines. And now over this period, ironically enough, I don't think we're going a hell of a lot lower. You know, there's 38.2s. You saw how we stabbed into the 13 EMA. You also saw that on Bitcoin, stabbed into the 13 EMA. That's why I like to use this moving average sort of as a support guide. I don't think we go through there or back down through there in earnest for a while. It'll take some time. And I wouldn't even be surprised if this acts as a bit of a support line, like you can see all this squiggly line theory for the win. But the pullback here will be nothing more than whatever this 38.2 is. We could sort of make an assumption. And there. So let's say we go all the way up top there. I don't know. But interesting. You can see here was this recent tail low. Wicks and tails like to be eaten. And notice there's 38.2. So what probably happens here is, we dip down in here. And on the way down, of course, everybody will be panicking and there'll be some sort of great scandal, some coin, some hack, some exchange blowing up or something like that. And everybody's freaking out, but all they're doing is they're just bringing it down into the classic wicks and tails like to be eaten, right? There's that big tail right there. So, yeah, you can kind of see history's going to write itself here. Pretty cliche. So for the time being, certainly don't have any sell signals here, as we are pressing higher. Things are looking good. And actually, probably the way I want to spend, the rest of sort of this public rant space here today is, like I said last night, we sat with Adam and we just went through some of his favorite names. Hello, MYRO. Adam, you said this was one of yours for monthly W's. I don't see this one.
That was the bird eye one.
Bird eye one.
Yeah.
I don't know what that means.
Solana. That's a Solana coin. It wasn't a monthly W, which is
Okay, so I'm not quite sure why we even had that on there. So not a monthly W. Goodbye. And now that's gone. All right, so we've got a few names for you to chew on here that I think, if you start seeing things like monthly Ws, then the market's trying to tell you that it's trying to put in a base. And this is probably the best way for like new people to approach this space is actually just, they always say, the best place to find a gold mine is to look right beside another gold mine. Well, the best place to find a good buy is to look where it was previously a good buy. So, monthly W's are about as easy as it gets. Try to figure out where the market's a half decent buy. We'll just go off of price action to show you these here. But you can see this one went down. Somebody said stop going down, go up, and it took off. Woohoo! And notice on the bear, all it had to do was basically work its way right back down into this original bottoming area. And somebody's coming back out and saying, nope, no, this is value. You don't want to go down here. You want to go up. Or at the very least, don't go down. So looks like sellers were getting exhausted here. And sellers just, ran out of coins to sell. Excuse me. And buyers would perk back up. And sellers would come back and buyers would perk up. Sellers would come back and buyers would perk up. And then we actually got to the point where the buyers actually overwhelmed the sellers. Actually, this is a beautiful 2-bar pattern right here. Your nice tweezer bottoms, railroad tracks, whatever you want to call it. There's a number of different examples right off of this level. You can clearly see where value is on this name. Seems to be about 50, 55 bucks, somewhere in that area. So I like the idea of people, you want to keep this as simple as possible, as you just simply draw, play, connect the dots. What are we supposed to think if we see the market smiling at you? So the market was smiling. So you really had no business being in this market. You want to wait for W's on other sides of trend lines to tell you that, hey, now we don't have smiles, we've got smirks. And actually, this is an interesting one because there's a little bottom within that bigger bottom there. So this is a great place to start. This has nothing to do with risk management rules. If you're going to have to define what type of risk manager you are and then build your plan around that. But this is just all around, ideally, if we find 3 unrelated reasons to justify taking a trade, we're rational investors. If we have good sort of fundamental reasons to be involved in names, I think we get the odds up into the 60-70% area for win rates. And, you know, if you can bet those kind of numbers, you're doing pretty well in this game. So here's an example where I would prefer that people hunt for ideas with charts that look like this. Unfortunately, um, uh, quite often people will come in and buy, you know, markets when they're booming higher over here. And that's what we have to do is we have to try and convince you not to get involved here. You have to wait. And I was even telling somebody the other day that, you know, they probably don't even realize it, but basically this market's been garbage for the past couple of years. And if you had come to me a couple of years ago, in fact, we were in Portugal and people are saying, hey, should we buy crypto? And we're like, no, you missed the boat. That rally's over, maybe in a couple of years. Actually, our buddy Eddie over there, he does a fantastic job. I think he's setting himself up pretty well to do really, really well this cycle. And I gotta say, you know, he sort of first got involved with TRI best that last cycle peak. And we had to sort of convince him just to cool his jets and just don't do anything. And I've noticed that, you know, over the past year or so, I've been slowly accumulating and then banging out doubles. And now he's got a bunch of free positions on. And we're now into the part of the market. And you can kind of see like the way these markets operate is kind of in a saucer bottom. So you can kind of see the saucer will look like that. So what does that mean the next couple of years are going to look like? There's your next couple of years. And you can see the saucer. So guys who actually have taken the opportunity to learn how to build and run trading plans and have positioned themselves and have just cooled their jets. Like I said, the other day I was talking to somebody and I said, you don't even realize like you're actually pretty lucky right now to be coming into the market right now and being interested because nobody in the public is interested, right? Would the public be interested in a market that looks like that? No, not at all. When we're back up looking like this again, that's when the public will be going stupid. But are they going to make a lot of money to the upside buying up top here? No, they're going to get their heads handed to them. It's just the way this game works. So these other people that are relatively new to this right now, in fact, actually, they did buy one of these names when it was up top like that and they got wiped out. And so they hate crypto. But now I'm just sitting here going, well, you know, ironically enough, you just went through all that pain. You are crying. So when you, the public, are crying, guess what Brian's doing? He's buying. And then when you, the public, are going to be yelling and telling me how wonderful crypto is and how it's such a good investment, I'm going to be selling. It sucks, but that's the way the game goes. So anyway, hopefully you look at this chart and you go, gee whiz, that kind of looks like the letter of the alphabet that Beamish guy kind of likes. And this is what I would actually suggest you do, is that you build a list of names. And as you can see, I've even named it here on the TradingView platform. I'll call it my watch list. This is Adam's monthly W's. And this is really how you should start your research if you are a technician, is go out and build a list of assets that have these monthly W's. Now, this doesn't mean you actually go and buy this thing here today, but it's a good start where you go, okay, well, on a longer term basis, I've got a floor to work with. Then at this point, you can pull it to go down to like the weekly price chart. You say, okay, where is the weekly W, right? And you can clearly see it's down here. There's no reason why at this point you can't do things like draw your reload zones. And go boom. And we'll flip that around. And go boom. And of course, you all know Brian's big fat favorite Fanny Fib, BFF, something like that. I don't know. There it is there at $64, right? 78.6, right there on the nose. And hell, you can even do crazy things like draw trend lines and notice they will intersect this line. And didn't we say something around May, Brian's birthday, we should expect some sort of dump into the market. So you can kind of see how already we started with the monthly chart, right? Adam did all the heavy lifting and found us the names that are putting in these monthly bottoms. Then, so we've got our list. Thank you, Adam. Every day, wake up and say, thank you, Adam. Who is it? What's your buddy across the street? What's his name?
Jimmy.
Jimmy. Jimmy should literally open up his window and every freaking morning go, thank you. But I still can't buy yet. We're not in the reload zone yet. Actually, I guess that would be the wife. That wouldn't be Jimmy, would it? My apologies. Mrs. Jimmy. I'm sorry. I'm all frazzled about losing my cell phone. I forgot your guys' name. But I do remember their name is very close to Solana, right? So Solasi? Is it that the
Solari.
Solari? Oh, there you go. The Solaris, right? So hey, we're gonna make you guys famous whether you like it or not. Anyway, I'm sure they're watching now. So I'm rooting for you. And of course, I actually made them a deal. I said that and actually I want to know, Jimmy, right? I want to know. And actually, it's Jimmy should be on the call here, right? Or where are you, Jimmy? Are you here? Is there a YouTube page? I don't see the YouTube page up and running here. Because of course I'm running like with a chicken without a head here. But do you see Jimmy over on the YouTube page, guys?
I don't see.
No.
No, it's not to say that he's not on there.
Yeah, and then the wife as well, right? Mrs. Jimmy. What was Mrs. Jimmy's name?
Liz.
Liz, that's right. Yeah, actually, Adam keeps saying Liz is going to be a monster at this. She's going to own us all by the end of this. So, as you can see, I'm kind of running like a chicken without a head here. Let's see what we got here. I guess we should put that over there. What's the Yahoo page? I just want to see. Is there anybody actually even over on the Yahoo page? I'm probably just talking to myself here today. Eh? No, not Yahoo. What the hell's the name of this damn thing? Google. YouTube. That's what we're talking about. Jesus, how can you tell Brian's going senile? YouTube. There we are. But I wonder if I have to be logged into a different account or something. Hey, there's Cypher. Hey, is Cotter here? I would love just a 10x. I would sell some there. All right. Cotter's rocking and rolling. Yeah, let's see. I'm on the YouTube page. Jeez, it's incredible how wide this is. There it is there. So the question is, who am I? I'm logged in as my own person. How do I get that chat open? See if I can figure this out on the fly. Probably not. Anyway. Let's go rational investor. Hey, we're up to 8,000 subscribers over here. Way to go, page. Okay. Where are you? Go live.
Mhm.
And then we'll go stream, I think. And then at least I can see. So is Jimmy verified it's you? Oh, goodness. Oh boy. It might make me have to jump through some hoops here. I don't know if I did that right or not. Anyway, if you are watching, Jimmy, please let us know, and Liz. And oh goodness, now what are they doing? Oh no. It's asking me to punch in a code on my cell phone. But I don't know where my cell phone is. Oh goodness. Oh well, that was a big waste of time. Can you? Oh, do you see the code? All right.
What's the code?
47. Thanks, man.
Mhm.
All right, there we go. Cool. Damn sad cell phone. Anyway. Okay, so let's pop back on over here. And ooh, 53 people watching. There you go. All right. So did our buddies check in with us here? I don't see them. I see Andrew Middleton. All right. Anyway, all right. Well, I was kind of hoping that they would check in, but all right, I guess they didn't. Okay, so point of the matter here. Sorry, I totally derailed everybody with that. My apologies. I hit the like button, subscribe, ring Colleen's bell, all that kind of fun stuff while you're at it too, please. I'll put that back over there. Okay, so at this point, what I'd love to hear all of you doing is putting like alerts. There's no reason why you can't on your trading view. Just simply plug in a line and just put an alert. And when the market crosses that line, we will officially come into trade location. Then at that point, of course, we would ideally like to look down at our indicators. Maybe we see price come down, then make a W, and then break out. And then we look down at our indicators and we see the indicators do not make a new low when price did make a new low. And then that W is a buy signal over there. So, we want to see something along those lines. But the way you start this process is you have to build the longer term, higher time frame trade matrix, finding those monthly W's. So there's a really good example. Take a screenshot of that. All you level oneers, anybody who's in the level one program watching this video right now, take a screenshot of that. Throw that in your journals. That's actually a really, really good example of exactly what you're here to learn how to do. Can you do that? I don't know whether you can or not. Anything what I want you to do is prove to me that you can do that. Let's see, just make sure this just did it. Yeah, there you go. Right on. Maybe is our buddy. Who is it? Liz and Jimmy. Gotta try and remember that. Should staple that into my forehead. Okay, moving on. There's one name for you. Let's look at another one. NMR says start at that monthly time frame. Can you see the monthly W? Can you see that the trend line off of the tops has been broken? And we get a W on the other side of the trend line. Oh, hello, starting to form. Not bad. And can you go down to your weekly price chart? Can you see the actual weekly W? It's a big one, but same sort of logic. No reason why you can't draw your reload zone. And boom. There we go. 78.6. You know, Brian, you heard him talking about wicks and tails like to be eaten. Tons and tons of tails down in that area. Well, don't mind that. It's not a bad looking level. 1467. Throw on a nice alert, and you are starting to build your technical watch list. It's pretty straightforward. Not rocket science. And you could even do things like draw a nice simple trend line off of these lows. Should give you some support and resistance lines going forward. Stuff like that. That one actually looks a little bit softer. So you can see somewhere down in this area. Wouldn't be going and chasing up here. But at the same time, too, I mean, some of these names, like this off of here off of Binance versus Tether, this actually isn't really the best way to look at something like this because it doesn't really have the whole history. I know, for instance, like NMR, I've been trading this thing forever. And if we actually look at it, something like versus Bitcoin, like on Trex, but I don't think Trex is around anymore. But if you look at like Binance or excuse me, Poloniex, actually, man, that was only 2019. Anyway, hopefully you can see, we're basically down at the bottom end of ranges here. And you can see there's a cute little W that's down in here. Remember, this is a weekly price chart. So, same logic if you want to do this for Bitcoin, you can see reload zones are probably down in this area somewhere. I personally, if I'm going to trade these, I always do them versus fiat. I do not do them versus BTC, but that's just me. It's a personal thing. And we can just keep going through this list one after the other. Look at this pretty name. I mean, it's just so textbook. And like the irony, and guys that have been around the site for a while, Eddie, I saw Carter in the lounge with us, of course, Adam and Chris here sitting with me while we're doing this video. They all kind of know this, but if you're brand new to trading, you just don't realize this. This is an incredible opportunity when you see the markets like this. This very, very rarely happens. You know, I mean, if you think about this, this is 2021, right? This is 2024. So that just alone is like a 3-year window. And most of this 3-year window, even all the way up through this, is there was really nothing to do. It's only now that we actually are starting to carve out these W's that you actually need to start going, okay, well, it's time to start paying attention. It's time to start building positions. So this is that same comment I made earlier about people that are just coming into this space right now. Most of the 4-year cycle, I tell them, put your money away. I mean, of course, if you're brand new to this, put your money away anyway. You got to learn the process. But we are in the window right now, and it probably will last for, I'd probably say maybe the next 6-8 months or so. Well, you're going to be buying. You actually have to be in there investing your hard-earned money. Somebody want to take a soundbite of that? I mean, look at this chart. The chart says everything right there. When I was trading with good old Kenny Roberts years ago, we just used a 50% rule, not even expecting to see new highs, but what's a 50% rule? This is what naturally the market should bounce to. And it's not really like we're asking anything outlandish. Like you could even see like here to here. Notice this bounce didn't quite get back to 50%, but it's this bounce action. In this particular case, this probably came to like just the bottom of Collins pump chaser, dump chaser zone, wherever the hell that is. Pump chaser, there we are. Yeah, so you can see it just barely missed hitting 38.2 there. But and you can make the same argument here. That would mean, and let's assume that this one just does the 38.2, doesn't make it to 50%, although I would assume that it would do 50%. But let's assume it just does 38.2 from there to there. That's what is that number? That's a big number. What is that number? Holy crap. Let's see if we can see this. Old man glasses. There you go. Look at that. Frick me. Liz, Jimmy, I mean, do you see this? Do you know many people? Can you go to the bank and put your money in a term deposit and get 682% return on your money? Is that even remotely realistic? And that's literally what we're looking at here. The sad thing is this will go up into these levels. This is just really technical, kind of no-brainer stuff. Ideally, we would like to see these things go to new highs, right? And that now is like 2,000%. But, let's keep it conservative. That's almost 10x just back to the 50% level. Not even really asking that much. So this is why I think that this is the opportunity to get into the market, right? Is to realize these gains. And when they happen, of course, then the public comes in. And the public is going to be expecting another 900%. But look at where this thing has to go. If we do the 50% level and then somebody comes in and asks for 900% return, that would mean this thing will have to go. Keep going. Keep going. Right, to get 900% after we hit the 50% level, it's got to go all the way up here. Or now, and that's like 10x, right? The 50% target level. Is that realistic? I don't know. That's tough. But ironically enough, 50% bounces are actually very normal and good. And I would even argue that this is why you want to set yourself up to take advantage of these, is get yourself that nice trade, that nice cushy position. And then if the thing does go to the moon, which is actually pretty low odds, well, you're laughing. You got free coins, and that's just gravy. But this actually, I think, is actually a very normal technical occurrence that should happen. But no, obviously no guarantees from the management. So, uh, this is probably also a good example too, where I probably wouldn't even be that interested in buying this right here, right now. Where would I want to buy it? I'm just going to zoom in, do our reload zones. In fact, I might even go off of there to there and notice if we do the reload zone off of here. Oh, look at that. 78.6. Brian's big fat favorite fib. Boom. Beautiful double bottom. I mean, this is, if anything, a really good example of all the principles that I was just talking about off of the other names, right? Hunt that 78.6 pullback and get in. If you bought that there at 8-9 cents, you'd already be sitting on a double right now. Sell half of it, get your original money back, take the free coins, put them on a USB stick, go bury them in your backyards, and just forget about them. And who knows where the hell this damn thing goes down the road. That's how you make the big bucks in this world, people. It's pretty straightforward. Question is, can you do it? I mean, there's an example of it laid out right in front of your eyes. So if I was interested in this one right now, since this did not make a new high, they're still the same fib levels. I think I might just throw my bid in right back in off of this 78.6 and see if I can pick some up off of those levels. Maybe if we're lucky over the next, few months, this thing just goes sideways in this range. But, ironically enough, me going out into the public and trying to sell the public to try and buy this, that would be like pulling teeth. They'd look at this and go, what are you, some loser? I'm not going to buy this. This thing's a loser. It's doing nothing. You suck. I mean, that's the way this silly capitalist game goes. And I hopefully you guys have heard over the years, and I'm sure the veterans would all attest to this. I'm not going to tell you what to buy and sell. I couldn't give a shit what you buy and sell. It's irrelevant to me. I am most interested in what I do with my money. And my money, I'm definitely interested in buying some of this. Absolutely. Anyway, moving on. Here's a really good example of one that's already moved up. If we go back to our monthly W's, can't buy this thing now. Absolutely beautiful bottom down here, and even another beautiful bottom here. If I did want to get in on this thing, though, I can't buy this here. I have to draw my fibs, and notice 78.6 is basically a tag of this candle body low level. And if this thing doesn't come back down into this buying window, then I can't buy it. It's just simple as that. But I have it on my radar screen. And I can always throw on my horizontal lines. Let's maybe just even go a little bit higher than the 78.6. So I have a little heads up that it's happening. Create my alert. And now it's set. Well, I've set it and forget it. Don't even really want to look at this thing unless I get the alert that it's come back down to the bottom end of his range. Same thing here. I don't know the story of this OP. You can see it's relatively new. But again, hopefully you can see, there's this bigger W. So down, up, down, breakout. But there's also smaller W's, down, up, down, breakout. Pull back, down, up, down, breakout. There's another W there. You can start drawing really, really simple trend lines, right? Something like that. Something like, we can even go off of there like that. So you can kind of see where sort of a trend line support window is. And what do you think the odds are if we take our fib tool? And look at, you could have done this like 6 months ago. Notice if we had taken the fib from this high, let's see where 78.6 lines up. We'll drag it back down to this low. And lo and behold, look at 78.6. If you worked your stink bid right down in that level. Look at that level. And you had worked your stink bid, placed your alert there, just like I showed you with the other ones. And look at that. It comes dinging in here. Your alert goes off. You're like, okay, I got to go buy some. Back at the bottom end of the range. Cannon body, loves trade location. Wicks and tails like to be eaten. 78.6 on peevish guys. Big fat fib. Blah, blah, blah. Okay, bye. Woohoo! Look at me. I'm rich. I don't know if that's how you sounded, but hey, if you did sound that way, record it. I'd love to have that on file for our advertising. Just kidding. Anyway, point of the matter here is you can see how this is so cliche. Well, no reason why I can't do the same thing again. We'll drag our fib tool all the way up to that eye. Notice where 78.6 is. Notice all these sexy little tails down in here. Candle body lows or trade location, trend line support, right? Maybe we'll even take our little alert tool and we'll move it up here so that we get a little heads up that if it dips down into that area, our computer starts chirping at us. So cliche. And thank you very much, Adam, for this name. Can add it to the watch list. And if it just takes off and just keeps going, well, we missed it. Not much you can do about it. Just the way it goes. But you can see how basically I'm set up so that if and when it does decide to come back down to the bottom end of the range and it comes into trade location, I can start going into Spidey mode and start hunting for that trade. Does that make sense what I'm saying, guys? All right, cool. I've got my audience here helping me. Look at this one, Rose, a rose by any other name. Look at that beautiful little W down in there. And, Jimmy, if you're watching this, and Lizzie, and, we're going to be watching the football game this afternoon. So I'm going to be quizzing you. And I'll be pretty disappointed if I ask you, what was the name of the flower that is an absolute perfect example of what it is that I'm trying to teach you? I want to see both of you jump through hoops this afternoon. So we should place a bet. Who wants to place a bet? Adam, do you want to place a bet with me? What do you think the odds are that they're going to remember this?
Find out.
He's not going to put any money on it, eh? But anyway, this is a really good example. Again, all you, hey, quit with all your fucking personal issues, Brian, and I want to teach me something that I'll learn, and I'm going to be a better trader from watching your nonsense. This is a really good example of Adam, V bottom. Can't really trade that. Let the bounce happen, then let the market work its way back down. And look at this. This is a beautiful double bottom. Can you see that? That's what's called an Eve. Adam, Eve. Beautiful, beautiful example of the bottom. Really, really good. I sure hope when we're in El Salvador, I can see a double bottom that looks like that. Down on the beach, maybe if we're lucky. Bitcoin. See a Bitcoin that has a bottom that looks like that. Now that would be impressive. No, didn't even get a reaction out of the audience there. I guess maybe that joke was bad. Anyway, so I mean, what do you think the odds are that this action down here happens in a reload zone? I mean, look at that. There's 78.6. And actually, this is a really good example where I always tell you guys that if you just are patient and you just let the market set up, notice, look how this double bottom came in right off that damn 78.6 level. I mean, it's like textbook, absolutely textbook, people. There really isn't a better sort of teaching example for you. In fact, I'll put that in the lounge. Should probably even put this in the I have the Discord thing on here somewhere. Where is that? I thought I had actually, yeah. Yeah, here it is. There's Eddie. Eddie's so awesome. Also, bot can work here. All right. Thank you, Eddie. Steven. Oh, Steven's got a message. Hey, Brian. Oh no. Shitty. Oh boy. Yeah. Oh, boy. Sorry, guys. Okay. Where was I? We'll go to I guess the members room. Members lounge. Paste that in there. That is a really good example for everybody on the site to learn from. So you should all take note of that. Really, really good example. Check lounge, GRT. Yeah, I saw that, Eddie. Thanks. Hey, Zugi's here. Hey, Zug. Hope life's treating you okay, bud. I understand things a bit challenging there for you. I noticed that your mute is looking really, really good in here. I really like the look of that one. So anyway, okay, so here's a really good example of one that basically spat out a reload zone, double bottom buy signal, and boom. you buy whack there at 4, I guess about a better part of a nickel. And of course, here up at a dime, you're selling halves on doubles. Hell, this one, I suppose you could have sold half on a triple and even jacked your returns even a bit more. What do you do now? Well, it's pretty straightforward. Take your fib tool, draw it against the lows. There's 78.6. You hear Brian talk about wicks and tails like to beat. You can see there's some pretty juicy tails. That's a tail, that's a tail, that's a tail. There's 78.6. Throw on your alert right off of that level. And hopefully your computer starts chirping at you when we get down into that area and go back and reload. I mean, the irony of it all is hopefully what you're seeing is this is the same message over and over and over and over. There's another pretty one from Adam's monthly W's list. Look at this beautiful W here. And look how this thing, I mean, Jesus, stuff's so cliche. So there's your huge rally off the original W. There's your 78.6 drawn off of that high. There's the original market structure, right? What I'm telling you is to go and throw an alert on off of that 78.6 level. And as soon as the market works its way back down into that level, your computer's going to start chirping at you. Can you go and just nanny nibble off of this? Or can you, at this point, go down to like the daily price chart and start hunting for long entries? I don't know. This is now the daily chart. So we did that study. And I don't know, is there any W's down here that maybe you could have bought? Look at that. Didn't I just say something a few minutes ago about Adam and Eve? Can you see that? Look at that W setting right up off of that level. Like, holy crap on a stick. You can't script this stuff any better than this. Solaris, are you watching? Did I get that right? Solaris? I got both of them nodding now. That's awesome. Are you? There's another one, right? This is fetch.ai. So it's going to be I'm gonna quiz you. What do you tell Adam's dog to do in the backyard? Fetch, right? Does Max fetch? All right, so you guys can come and play fetch with Max to remind you about what bottoms look like. I mean, geez, that looks absolutely perfect. And same sort of thing. No reason why you can't do exactly the same thing now. I'll go back to our weekly charts and we'll draw our, that was all this trade weight. This is like 2 years ago. Everything looks exactly the same. So you could have done it here, right? Let's take it all the way down there, 78.6. Look at this beautiful bottom that came in right in the reload zone. This is like textbook. And okay, well, you're sitting there now. Now, okay, Brian, Mr. Smarty Pants, what am I supposed to do now? Well, draw your reload zones and notice 78.6 would basically be a revisit of this bottom. So take your alert tool, draw it maybe a little bit above the 78.6 so your computer starts chirping at you as we start coming into those levels. And right now, do you do anything? No. You just sit there and just be patient and disciplined and wait for the market to work its way back down into buying windows. It's pretty straightforward. Let's do another one. Beautiful W. Look at the size of that one. All right. It'll be a nice monthly. Look at that railroad track. So sexy. A nice Adam and Eve bottom. Well, maybe not Adam and Eve, but Adam and then maybe Steve. I don't know. Double bottom actually, and I think one of the reasons I seem to remember when we looked at this last night, I even went, whoa, you know what, I better start paying attention to this one. So we draw our fibs. There's 78.6. There's the original market structure bottom. We like to call this a shark setup. When you have the original market structure bottom set up off the 78.6 level, then you can also draw a nice simple trend line off of these lows. I might do one there and then do another one here. So that gives you sort of like a trend window to shoot for. Something like that. and you can always extend this over time. But there's sort of your trend window that you'd like to see price trade back down into, something like that. Right, and of course, there's Brian's favorite fib, and you've heard me say this a couple times. Let's say it again. Let's throw on maybe a nice little alert just above those levels, so your computer starts chirping at you as we're coming into that area, and you're just going to sit there and just be patient and wait for the market to come down into the bottom. It's just that simple. I mean, hopefully you see that this is just the same thing over and over and over. This is a name that I made a lot of money on 2 cycles ago. You can see the double bottom down here. You can see the reload zone, double bottom in a reload zone off the original bottom. I mean, this thing's getting ready to do all its fun stuff again. What are you going to do if you want to buy? Draw your reload zones. Interesting, 78.6. You can kind of see that it looks like there's even a little bit of a price gap that needs filling in down here. Actually, that's not bad. Maybe if we go down to a daily chart, you'll see some action down there. All right, you can see there's a little bit of a price gap there. Actually, be interesting trivia. We'll ask the Solaris to see whether they were paying attention through the video here today. What's the statistical probability that these holes will be filled in at some point down the road? And everybody, of course, Brian, look, H bar 1 week. So Cypher's already telling me in the room. I've already got Adam's names here. So, we're getting on about 20 minutes to the top of the hour, and I still got to fucking tear Adam's house apart looking for my cell phone. And I have a meeting with Liam, of course, here at 1:30 this afternoon. So I think we're probably going to wind the video up once I'm finished with Adam's list here. I just wanted to give everybody a nice, what is this, about a better part of a dozen names for you to add to your watch list. Call it Brian's Super Bowl treat. Maybe that's the name you want to give this video here today. But anyway, point here is this is a gap. And Solaris, what is the statistical probability that that hole will be filled in where price will actually come back down and trade into this and actually make a body to fill this hole going forward? Does somebody want to give them the answer? I'm not going to say it. They have to be paying attention and literally write it down. And then that way we know that they were paying attention to the video today. So who wants to write it? Where's the YouTube page? Actually, you guys should be, let's do it in the classroom. And actually, this is kind of a level 2 concept, but so I'm giving you a little bit of a treat here today. Level 1, Q1, 2024. I am going to post this image in the room, and I want everybody in the room to post what the statistical probability that yeah, I'll see you, Cotter, and I guess in about a few days, about 1 week. What's the statistical probability that hole will be filled into at some point down the road? Anyway, there is the big chart. In fact, well, I will even just write on here. You know what? In fact, what I'll do is I'll just say, what is the statistical probability these gaps are filled in over time? And if you are a long-time follower, if anything, to help out the noobs, I'm going to post this in the lounge. And can everybody who knows the answer write the answer? And hopefully we have a whole bunch of people that answer this. And so the Solaris are like, ooh, cool. Wow, man. Everybody's working to help us learn. So point here is there's 78.6, Brian's favorite fib. There is the original W that I want you hunting. And so what we've got some gaps that need filling in. We all know what the percentage is that there's. So let's go and throw on an alert on that line. There we go. So you can see we've literally built our whole sort of planning for the next, say few months around this list of names that we would like to invest in and where we should be considering investing. Doesn't look like we have an alert line here. Let's put one on here as well. All right, so something along those lines. All right, let's see. I think, you know what, we're probably going to leave it at that. We're getting on 1 o'clock here today. So a little bit of a shorter video. Got a couple other names. As I said, I have to get ready for Liam videos here, and I'm on the road. So we do a test at 1 o'clock. So I got about 10 minutes to get ready for that. Also have to find that damn cell phone. And then we have to head off and go cheer for the 49ers, right? I think that's who we're supposed to cheer for. All right. So I think I'm going to leave it at that. Did we have too many questions and answers today?
No question.
All right. So I didn't hear any questions. Giving you a bunch of stuff to chew on here today. A bit of a shorter broadcast. Looks like the stock market's feeling uppy. We see that the US dollar index itself is kind of heavy, which would be sort of favoring a risk on kind of trade. And considering we do have the big football game here, and I think there's probably going to be crypto touts and things like Coinbase commercials and, ETF commercials and all that kind of fun stuff to get the public to buy. So it doesn't surprise me that we have price all the way up top here. And if anything, we'll try and do a video for the community tomorrow. And we'll see sort of the aftermath and whether there were any commercials with regard to crypto and stuff and how all that did. But on balance, capitalism is just doing its capitalist thing. And as I said, I gave you about what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, I guess 9 names, and went through the process of how I would be starting to think about how I'm going to start participating in those names, given where they are currently and what the technical picture looks like. All right. Have yourselves a great day. PMA for the win. Slow and steady wins the race. Remember what your number one job is. All the best. And the only thing left for Brian to say to you at this point is bye for now.